Welcome one, welcome all to DeFi Crypto and Airdrops. I am Mike, aka Veteran Crypto, and with me we took a little break, but we're back. We got Taylor and Jeff for Money Talks. I know Taylor, you just got back off of a trip. How was all that?
Oh, we had a great time in Alaska, enjoying the cold weather up there. Have you ever been up to like Ketchikan and
Yeah.
Juneau and all that? It's a lot like your place.
yeah.
Yeah.
Yeah, no, it's beautiful up there. I did some military training up there.
Oh yeah, it was beautiful and highly recommend it. Probably not this time of year; it's getting a little cold, but we had a great time.
Well, looks like you brought back a beard with you.
Yeah, I've been shaving for 2 weeks. This is what happens when I don't shave for 2 weeks. What are you about 3 weeks into your beard or something?
This is a 5 o'clock shadow. I shaved this morning. Jeff has a baby face as always.
Hey, I
Oh, yeah.
shave.
He looks younger. He lost 10 pounds, so he looks a lot better.
That's
Oh,
right.
nice.
Well, I got to myself pretty for for Taylor. He's real picky
Nice.
about that.
Well, we're gonna jump right into this because I know we only got an hour, but we're gonna be talking about. There's a lot of chat on social media right now. Obviously, gold is at all-time highs, silver's at all-time highs, Bitcoin has already reached its all-time high and done its pullback. But there's the usual tribalism going on where the gold bugs are bashing on Bitcoin and the Bitcoiners maxis are bashing on the gold bugs. And so I really want to dive into kind of the pros and cons because me personally, I've been stacking gold and silver for 40 years and I've been in crypto for 5 years. And so I see the benefits of both, but I kind of want to dive into this really quick. And I'll read this little clip here that I got just to kind of set the stage, and then I'll hand it off to you, gentlemen. So the ongoing debate between gold and Bitcoin investments pits tradition against gold with its 5,000-year history as a store of value, appeals seeking stability amid inflation and geopolitical risks. The digital gold offers scarcity in a digital form, but comes with higher volatility and ties to tech-driven markets. In 2025, gold has outperformed year to date by 62%, while Bitcoin is up only 15 to 16% amid a mid-year dip. However, over longer horizons, Bitcoin's explosive growth dwarfs gold's steady gains. The choice depends on your risk tolerance: gold for preservation, Bitcoin for potential upside. So, Taylor, what is your take? I mean, do you invest in gold, silver? I know you invest in crypto.
Yeah, so yeah, I own a bunch of gold and silver right now, and so currently, because of what's happening, gold is the hedge against inflation, and that's generally why the market is investing heavily in it. Is because all central banks are printing heavily, and so gold is going to continue to be a good investment as long as we are going to continue to see this demand to print more, dollars or yen, whatever it is, to finance these nations' love for debt. And so, uh, gold is a great investment. You are never going to get rich off of it. It is a good hedge for inflation. That's what people need to understand. Like, it's always been that way. It's been around forever.
Mm-hmm.
One of the things to understand about gold is central banks, they have to get very creative to keep the price down of gold, because gold is also used in a lot of, especially in like electronics and stuff. If it continues to keep getting higher and higher value, it's going to drive up the cost of a lot of different things that are out there that we just don't traditionally think of. Every computer has gold in it, every cell phone has gold in it. And so, while gold is a great investment, it's very steady, you're never going to get rich off of it. So usually, like Jeff, when he's advising people, he's a big determining factor of what you invest in is your age. If you're old, really, and you've saved a good amount of money, really your risk to yourself is, hey, we just need to protect you from inflation. We don't need to kill it in any type of thing. We can't take the risks of everything falling apart on you. Now, the problem with Bitcoin is two factors with investing it. One is its volatility. It's very, very, very scary to be in it, because if you don't like seeing your account drop 50% in a month, Bitcoin might not be the investment for you, because it can do that.
Yes.
Now, generally, and then your second risk is technological issues, because a lot of people don't understand. They're like, oh, well, people were saying by 2025 Bitcoin was going to be at $1 million a coin. Well, yeah, if you didn't have 100,000 different altcoins that are out there, it would be, because it used to be that and Ethereum were really the two competing with each other, but now money is divided over so many different venues that Bitcoin hasn't done as well as they projected. However, there is a better model historically to determine the price of what Bitcoin should be at if it continues, like if there's no technological issues that make it not a viable thing for the future. And that's what's called Metcalfe's law model. So Metcalfe's law is basically the best way to kind of think of it is taking Bitcoin and comparing it to like a cell phone. So cell phone investment, its growth potential came from how many users are going to be out there. So when you take Bitcoin's price and you look at the users, how many people that are adopting it, you get to a better model of what should be Bitcoin's price in the future. Okay, and according to Metcalfe's law models, they base by 2030 that Bitcoin should be worth about $1 million a coin. That if user adoption continues, the argument might be crypto might be just too difficult for too many people to get on and use. Therefore, or even Bitcoin, maybe something else comes along that's easy to use that kind of becomes the model going forward. But that being said, the lowest projected model by 2030 for Bitcoin are around $300,000 a coin. So roughly, you could triple in 5 years. Or 300x return. That's your low case look. Will gold do that? Maybe, probably not. I mean, it's a possibility with inflation. But really, in investing thing, it's good to have gold as your hedge. Again, it's always going to be a safe. Humans have been valuing gold since as long as we can find human beings. They've been obsessed with gold. I don't know why that has been, but you can go back into 10,000.
It's because the Nephilim. It's because the Nephilim.
That it must be. There has to be some kind of explanation why this one metal has been worldwide the thing that people have valued.
I've always wondered that, just cultures around the world separated by oceans and great distances, they all historically, 5,000 years and more, have all, seen gold and silver to an extent as these, elements or these items that they would amass. It's really weird.
So I would think of if you want to invest, if you're trying to make money, like if you're really trying to grow your money, Bitcoin's going to be your better opportunity. If you're trying to just have a hedge against inflation and sit your money somewhere, gold is a good investment. And so that's how I would view the two. If you're watching this thing go, well, crypto is too risky for, like, in my opinion, if crypto is really going to continue, then Bitcoin is always going to be, you're going to have Bitcoin in 5 years somewhere between 300 and probably $1 million a coin. That's, where I'm seeing that Bitcoin would be. Is that a good return? Absolutely. If it gets $1 million a coin over 5 years, you can, almost 900% your investment in 5 years. That's a great investment. You can't get that, but you have to be able to just put the money away and forget it, and just go, I'm using this as a long-term investment.
No, absolutely. So, Jeff, I got a question for you because this is kind of your wheelhouse, and Taylor brought up a good point. But really quick, I do want to point out, as Taylor said, that gold is consistently protected wealth during turmoil with low correlation to stocks, often negative or neutral, and bonds. In 2025's geopolitical tensions and inflation spikes, it surged 16% year to date. And I went through those statistics already. But the question I want to ask you, Jeff, is Taylor brought up a good point that potentially what you should, me personally, I diversify across all of them. But if somebody was only to get into one, Taylor brought up the excellent point that it has a lot to do with your risk tolerance that is kind of correlated to your age. The older you get, the less risk you want to take. And the younger you are, the more risks you can take, make mistakes, and be able to rebound from them. Would you agree with that, Jeff? And if not, and if so, kind of what is your
Yeah, I think so. It depends on how you, yes. So it depends on how you define risk, right? So is risk volatility or is risk permanent? Most people, well, not most people. Someone told me once true risk is the permanent impairment of capital, right? So, for example, you bought Enron in 1998, you tripled your money by 2000, and then it went to zero. And your Enron stock is never, ever going again to go back up. That is the permanent impairment of capital. That was the risk you took, right?
hey, I'm diamond handing my Enron.
Right? So I think the main thing that I think is what I would consider this to be is a false dichotomy right now. I understand the digital gold, like the main reason why people talk about Bitcoin is digital gold, right? Originally, is that it's a finite amount. Just like we don't necessarily know what the actual amount is, although there's estimates that geologists and physicists and what have made. There is a finite amount of gold on the planet. Ironically, this last week, by the way, they just announced in China they found an $83 billion reserve in China.
Now I gotta ask though, because I was looking that up, and that I believe was news from last year that they found
And maybe let me just rephrase. I read it this week. I don't know if
yeah.
they found it this week. I don't know if they found it last year, but yes. But even so, it's a $30 trillion market, so it's not like it's like 3 or 4% of the world's market. But
No, it's not going
here's
to make
what I want to point out is it doesn't. They are not behaving the same, right? Gold, I think, is surging for several reasons. If I can I share my screen?
Bring up your screen and I'll pop it
All
up.
right, I got. Let's see. How do I do this here? I've got something really cool to show you. Two things I want to show you. But the first is my issue with gold as a financial advisor has been that, quite frankly, we humans suck at the long term. We suck at it. And so let's see here. Share screen.
Yep.
Check this out. So can you see?
Yeah,
Can you see this?
There we go.
All right. Now I don't know how to. Let's see. I'm not sure how to make this bigger. Zoom. Here we go. I found out how to make it bigger. That's what she said.
don't tell your wife.
All right. Okay. All right. Check this out. So here's the problem. So this is gold. This particular person saying it's gold versus faith in central bank, and you can't really probably see all this necessarily, but it starts over here, August 15th, 1971. Nixon closes the gold window at $43.15 an ounce. Inflation peaked at 14.8% March of 1980. Is this? Alan Greenspan's great moderation. They thought the base of the Fed would make sure to make it so we didn't have inflation again. So let's just say you come and you invest with me, and you're like, Jeff, I want to have an allocation of gold. Cool. And it's June of 1981, and you do it, whatever this value is. But let's just call it, for argument's sake, $100. I don't know. And it does this. It went sideways for 24 years. Gold made no money. How many people do you know stick with that? None. Now, all of a sudden, we hit we start having housing gets crazy, right? We start cutting rates, leads us into the big financial crisis of '08. When that happens, gold surges because we print so much money. That really bothers people about the idea of how valuable is our dollar. And all of a sudden, we peak over here somewhere around probably about $1,800 an ounce. 1923, August 23rd of 2011, we hit $1,923 an ounce. And then from 2011, you had to go all the way over to 2022 before you finally said permanently goodbye to that value. So my issue with gold is, and what I want to warn people, I'm not saying, look, guys, gold could be 15,000 an ounce. If we don't get our debt under control, I have no idea what's going to happen, right? Because when you start looking at things, and I don't know if I can find it here, I got another one I want to show you. Can you see? Oh, I have to switch it on here. Hold on one second. Damn it. It went away. Hold on. Check this out. Here's another reason why gold has gone through the freaking roof. This is China's gold holdings. Look what's happened in the last year, dude.
Yeah.
In the last year, they have sextupled the amount of gold they're holding. Why? Because they're not buying treasuries, because they're pissed off at us and they got to put their money somewhere.
Yeah. Russia's been doing the same thing.
Right? So so this is a weird secular geopolitical play that nobody knows when or if it's going to reverse. But the main thing I want to point out is this, right? Bitcoin is way more volatile. And long term, I'm not even arguing with your premise. I'm not even arguing with Taylor's premise. I'm just saying the road to 1 million or the road to 500,000 or whatever, presuming Bitcoin is an asset in the future, which I think it will be. If it is, I think it's up and to the right. But the road to get there is going to be orders of magnitude more volatile than the stock market, much less more volatile than gold. The problem is what do we do with gold now? It's up 60-something% this year. Is it? Do we continue buying it? You know what I mean? Like, I don't know. I saw something else that said just this year. I mean, dude, we're taking all this tariff revenue in, according to Mr. Trump, right? President Trump. Yet our debt is growing at insane rates. I think it's up like $1 trillion in the last 6 weeks. Like we're not making a dent on that. And so I don't know what's going to happen. I don't mean to sound as panicked. I can hear myself. I sound a little panicked because I could see, put it this way. If someone told me, Jeff, it's 2027, gold's $14,000 an ounce, I believe it. You tell me, Jeff, it's 2027, gold's $2,300 an ounce, I also believe it. Because that's what history shows, right? You have these massive growth surges and negative to nothing for decades. So I don't know how to hedge this for people. I think it is smart to be an inflation hedge. The last thing I'm going to say about this is you can Google this. There's like an adage. It's not exactly true, but it's interesting. And then an ounce of gold will always buy you a nice suit. And if you go back through history, an ounce of gold was worth like, I don't know, like $20 or something. And
back in the 1800s.
A nice suit. In Roman times, an ounce of gold got you the equivalent of where the hell a nice toga, right? Now, an ounce of gold, now granted, it's ridiculous now. I mean, so it's a very nice suit. But even a year ago, an ounce of gold would have got you a custom suit, right? And so it really is a long-term store of value with lots of nothing and then massive spikes in between. Mm-hmm. How you play that is, if I knew the answer to that, dude, we'd be doing this podcast from my jet.
Well, oh, good.
No, no, I was just agreeing with Jeff.
Oh, okay.
That's
No,
what he's
I
like.
mean, I would say, I mean,
It's funny.
just to kind of, touch on the topic of, kind of Bitcoin versus gold, I don't see it as a versus. I see it as a totally different use. Like both of you just said, gold for me is a long-term hold as a hedge against inflation. Usually, looking at the charts like I am right now, seeing when it pumps is when the U.S. dollar is doing terrible. Um, Here, I'll.
I'm looking for some other stuff here, so that's
All right.
So,
So so
Michael,
yeah, I mean, it's like, I mean, that's what I see gold as, is a hedge against inflation. Now, Bitcoin is where I can make headwinds against the dollar. Like Taylor was talking about. Yes, it's much more volatile. However, with that added volatility and risk comes the potential for, a lot of gains. That's why I've, for the past 40 plus years have been stacking gold and silver, because I understand how it works long term. But I invest in crypto, part of my portfolio and diversification, to ensure that I can, try to make those headwinds to grow my value and not just keep up with the buying power. If that makes sense. Sorry if I butchered that, but go ahead, Jeff.
no. I'm good. I'm just looking up some different things. Go right ahead.
but I want to put a plug in here because, like, currently with the opportunity to DeFi, the Bitcoin is a far better play right now in my mind because, like, right now, I have about roughly 100 grand I'm DeFi of Bitcoin,
Mm,
and then I've sold off a lot of my gold, but I used to have about 100 grand. I'm down to about 50
mm.
because it keeps going up. I just keep selling, to kind of lock in.
DCA out of it.
Yeah, it's but with right now currently on 100 grand and using my ranges that I have, the ranges that, Mike, I think you're going to try to get a newsletter going that we're going to
Yeah.
try to put out a daily range of Bitcoin, kind of where you can DeFi it in. If you do it in the range that I do it in, it's producing about $300 a day.
Mm,
Well, you run that out over a month. That's about $88,000 a month. I can
yeah.
make DeFi my 100 grand. That's over 100% return a year. And so you can be part of Bitcoin, but also be generating income. And
And
that's the thing that crypto allows now. That I own gold through my account. They
yeah.
aren't paying me a dividend for it.
No, and if it's sitting in your safe, you're not earning either. And I'm glad you brought that up, Taylor, because I mean, to me, that's a huge pro of owning Bitcoin over gold. Is you can use liquidity pools like you're doing to earn. You can take out a loan against it. That I'm not a tax professional, but my understanding is loans, debt isn't taxable. So it's a way to access that liquidity to where you can take out a loan against it. You can loop, you can, take that to invest in real estate or buy gold or whatever else you want to do with it. And, the interest is very low. So there's a lot of different things, that, levers that you can pull on each of those assets. But I'm sorry, Taylor, keep going.
No, no, no. That's good. Let me take this really quick, and I'll show you just kind of since this morning. Basically, let me share my screen here.
Yeah,
Are you entire screen? That one right there. Share.
there we go. Add the scene. Boom and boom.
Okay, so yeah, this is just what I'm DeFiing currently, and as of this morning at what 8 o'clock, I've made $80. You know, I mean, that's pretty dang good return that you're never going to get anywhere else.
No.
I mean, and this is just now the secret that I kind of have. Like, you could do full range and you won't make this much, you won't earn this much, but you don't have to adjust it, every day. Is that, you know, I we know what range that Bitcoin should be trading in right now. I have it between about 103 to 113 is my range, and it usually was that. Now the problem, of course, with ranging and DeFi is when Bitcoin shoots through the roof.
Mm-hmm.
You know, you're at zero, and so you have to rearrange everything. But I just, rebalance daily to the new range that comes out, and I'm always in and always producing an income, income from it. And then I take what I earn and I just buy more Bitcoin with it.
Yeah.
And so that's kind of how I track how well something is doing. And on my DeFi of Bitcoin, I've made about 40 grand this year. So
that's a 40% return so far this year.
exactly, and it goes up, and I'm not including it's gone up in value because I started when it was around. I think you showed me all the DeFi kind of stuff when Bitcoin had dropped like 80.
Yeah, that sounds about right.
And I jumped in and I was like, okay, I'll give it a shot. And I understand people online are like, it's going to go to 50,000. It could go to 50,000. I'm okay with that. Like, I'm generating income as it goes along, and that's my goal, is to keep generating it and building up. And if it goes to zero, hopefully I've generated enough income and taken out enough profits from it that I don't lose everything. But the reality is you don't have opportunities like this with traditional finance. You can't do this kind of stuff. So
Well, and one thing to keep in mind with the liquidity pool is, as the price of Bitcoin goes down, like say it takes a dump to 50,000. As it moves towards the bottom of the range, it's DCAing you into the weaker asset, which in that case would be Bitcoin. So you would end up with more Bitcoin than you started with. And so, I mean, basically, if you go into HODL mode, you wouldn't want to necessarily rebalance, but you could take that Bitcoin, you could, there's more of it. You could take out a loan against it, if you wanted, and short it. I mean, you can short the market by taking out, loans against Bitcoin, because you pay back the amount of Bitcoin that you borrowed, not the dollar amount.
yeah,
So you could, if you go out the bottom of the range, you think it's going to keep dumping, you could just put that into a lend, earn yield, lending it, take out a loan against it. So you're earning on the yield. You take out the loan against it. With that loan, you can then take that and invest it in, anything else, depending on what you take a loan out on, what asset, and be earning on that, all the while. You could, in that process, you can short Bitcoin basically and make money on the way down.
So I have a question that's a little bit. I mean, it's a little tangential, but since I haven't been on for a while, the crypto crash, mini crash, I don't know what you want to call it. What, a week ago? What, it's a Friday, a week ago, something like that. What
Yeah.
is you know, um, like I know tons of people got liquidated, right, because of leverage, and
yeah.
that sucks. And I'm sorry for anybody watching that had to suffer through that. But is there any of those crash type events? Are they ever severe enough to like actually wipe a coin out? In other words, is it like, oh, XYZ coin is just
Well,
dead and it never recovers, or is it really just the whole diamond hand shaking the loose money off?
something.
Leverage in the system, and it's all back. It's they've all like risen back again some since that.
Yeah.
That
What went to zero? There was one coin that went to zero.
It was Atom. It's basically it's called Cosmos. Actually, a decent market cap coin. It's really weird what happened. So, in a nutshell, we had an episode on it, so I won't get too deep into it. But it was a chain of events, and so basically, people like to blame the Trump tweet, and that kind of kicked it off. But it was really weird what happened, because a lot of the depegging, like USDE, which is a stable coin that is on, I forget, it's on EtherFi. I think I got that right. But anyway, Basically it depegged, but only on Binance's platform. And then like Atom and a bunch of other ones also, went to zero or, severely dropped. But for the most part, the majority of it was only on Binance. And then they blamed it on oracles, which are the data streams that they use to get their price data. And then when everything was dumping, people's stop losses weren't triggering. So basically, people when all those dumped, there was $20 billion worth of liquidity that people got liquidated out of because stop losses didn't trigger. So there was a lot of shady stuff that happened in the centralized exchanges, which makes me more bullish on DeFi because DeFi didn't have any of those issues.
Yeah,
So
then Binance is like paying back a ton of people for wrongfully liquidating them.
they are doing it on a case by case basis, which is awesome. Don't get me wrong. Last I checked, it was only about $300 million. They took in a couple of $1 billion. So I'd like to see how that pans out before I let them off the hook because Binance has a track record of manipulating markets, dumping Bitcoin to dump the price, a lot of different things. They were the FTX collapse. CZ, the founder of Binance and was the CEO, he he's the one that kicked off, and probably a good thing, weeding out, that, cancer, the FTX cancer. But he was the one that dumped their token, their FTX token, and caused that whole fiasco to be unraveled with, three arrows. And I think that was part of it. Anyway, yeah, it was interesting to watch that play out. But it seems like Binance is always behind some kind of shadiness.
That's interesting. Interesting because that is the hardest part. They're not regulated. Because they're not regulated, you get these intentional pushes down to short things. Big shorts are put in. Everything's dropped, and then people get so. That's why I'm not big on doing any of this. Lending other than with solid, like you can Bitcoin. I'm okay. I think even with that shock, them trying to drive down Bitcoin. Yeah, it got to like 106. I think was the low.
103 is what I saw.
103.
It was like 102 and change is I think the worst across all the markets that went down.
I mean that held up a lot better than other things, but other things it was crazy. I remember you calling me going, "Man, I wish I had money to buy right now."
Oh well, I mean you hooked me up. I mean you like sent me that money you're like, all right, here you go.
Well, I was going to say that I paid you consultation to teach me the best investment of my life, which has been great. So,
wait a minute, Taylor's sending people money. What the hell?
I'm not sending him money. I was paying him for actual giving good financial advice.
Services rendered, I guess.
Well, that just hurts now.
I am grateful for that, though, Taylor. Thank you.
No, you earned it, man. It was well earned, and you showed me something that I could not have grasped unless you sat me down and kind of walked me through how that worked.
Gotcha. No, it is. It can be. I mean, well, that's why we started the channel. Was it's the learning curve on it is insane. So.
Which is why we can make money at it right now, because once people really figure it out, then the opportunities will go.
I do think there's going to be diminishing returns on DeFi, and I think it's a double-edged sword because as there's more adoption, there's going to be more people wanting to borrow. There's going to be more people wanting to swap, things like that. But at the same time, the more people that are providing liquidity, it's that scale. The people that are pulling liquidity and the people that are supplying liquidity, and that's what's going to determine, the rate of earning, the yield that you can earn. So get to work, Jeff. You need to become an expert at this so you can advise us.
That seems That seems redundant. You're already here. Why don't you just advise us, and I'll stay with the stuff I know.
Well, because you're the professional. You have like the credentials and the resume, and
I
I'm,
mean,
I'm
don't
just
get me
I'm,
wrong.
I'm
I have thought about a DeFi hedge fund over here, except I don't have a freaking clue what I'm doing.
well, yeah, I'll advise you.
I know we have to figure out how to do that in a way where you don't have to have a securities license, and so we'll just keep that nice and arm's length, like Taylor just did. But yeah,
We'll just do it offshore.
so I will say this though: gold doing what it's doing, Bitcoin in general doing what it's doing, not good for the dollar, not good for
No,
our future.
exactly. I
Yeah,
mean,
but the thing is they're really like in in let's say our government completely, over the next couple months decides, oh wow, we really need to get this under control. The moment that they really start going, we need to start paying down this debt, the stock market's crashing, because the thing that's holding up the stock market is the federal government. It is all this printing and throwing money into all, like the military, into social programs. But if they started cutting like the military and different things like that, that affects every company.
Sure.
It's cascades down. Like the government is really, propping it all up. And so the reality is it's going to keep going like this. The dollar is going to keep getting weaker and weaker if we keep adding to the debt.
so here's
But the
here's
moment
the
that they
Dixie.
decide, oh, we got to fix this problem, let's be responsible, say goodbye to your stocks. Because every one of the major companies live off the federal government right now.
Mm-hmm.
We have more welfare in this country than anything else that we're giving.
Yeah.
So this is the Dixie right here. The dollar index.
It's fine. I'm looking at the same thing.
Yeah, and this is on the monthly. Well, then you want to walk us through it, Jeff, and just kind of tell us, exactly, what those of us, those people out there that might not know what the Dixie is.
So that's funny. So I always call it DXY, but it may be called a Dixie. I don't even know. But the DXY is a measure of the dollar's relative value against a basket of currency, right? So I'm actually pulling up right now. So the basket is, let's see here. The basket is, I'm pulling it up and it's not composition. Here we go. It's currently calculated by factoring the exchange rates of 6 foreign currencies, which is the euro, the yen, the Japanese yen, the Canadian dollar, the British pound, the Swedish krona, and the Swiss franc. The euro makes up 57% of it. Japan's 13.6, British pounds basically 12, effectively 10 for Canada, a little bit less than 4. A little bit more than 4 for the krona, a little bit less than 4 for the Swiss franc. So the idea is at any given day, how big a basket, right, can you buy for your dollar? Right? How many euros? Like, so right now, so theoretically, for $1, you're going to get, I guess for 98 cents, you get 57% of a euro and 13% of a Japanese yen and so on and so forth. So like when that goes up, we're getting more of other people's currency from one of our dollar. When it goes down, we're getting less of their currency from one of our dollars. And so it's simply a measure of the strength of the dollar and our purchasing power against those other currencies. And why we care about that is there's a point at which if it goes down too low, you could theoretically start. I mean, this is sort of a doomsday scenario, but if the dollar got pushed down too low, and we've had the worst decline in the dollar through this year we have in like 30 years or something ridiculous. I think a lot of that's. I think some of that's actually tariffs. I think most of it, quite honestly, is just Trump in general, and that's good and bad because he's not predictable, right? And markets like predictability, but particularly foreign governments like predictability. And so They don't know if one day he's going to be their friend, the next day he's going to be pissed off at them. And so that affects how much they want to put into treasuries. But why does that matter? Why it's all wonky stuff? Why does that matter? It matters because if the dollar fell enough, are you going to want to put your money in as another sovereign nation into our treasuries? No. Because why? Because you're going to get paid in dollars. And if the dollars don't, you know what I mean? Like if I told you, hey man, I'm going to give you 5% for a 10-year treasury, give me, I don't know, $100 billion, Japan, whatever, right? China, whoever it might be. And you're going to get paid 5% on that. But it's 5% in dollars. If by the time you get those dollars in a year's time, it's like getting 2 or 3% because it's fallen so much against your home currency, you don't care. So there is some line in the sand where this starts to really cascade, and people aren't going to want to buy, foreign governments are not going to buy treasuries. And then people are like, well, who gives a shit? I don't care about foreign governments. Why do I care? Well, because we don't have enough money to finance our debt internally. The marginal buyer of our debt, which supports our entire way of life, from paying the military to Social Security checks, is because we sell treasuries to get money. And we sell treasuries money because people are like, you're the biggest economy, you're the strongest military, you're the leader of the world, we can count on you. And I still think that's true, and I think they can, and I think it is going to come back. I think it's going to take a major recession globally or a major war or crisis where people are like, crap, we still want to bet on Uncle Sam because we know he's got the biggest ass-kicking guys around, right? And that's why we're still going to be the reserve currency. But in the short to intermediate term, if they're not getting as much bang for their buck for giving us money, then they're not going to give us as much money, which means rates stay high. This is one of the reasons why when the Fed cuts rate, last time the Fed cut rates, like 3 weeks ago, right? Rates went up again. Now they've come down some, but they've come down, but it's not a direct relationship to what the Fed wants to do. It has to do with how much am I going to, if you didn't really have confidence in me paying you back, Mike, how much interest rate do I got to pay you to give me money?
They're 100%.
Exactly. So because, and it's not, and here's the thing, it's not that they think we're going to default on our debt. We can't. We own the printing press. They think what we're going to give them isn't going to be worth a whole lot.
Well, let me ask you this, Jeff. So there's a lot of rumors floating around that the reason that gold is pumping is it's being artificially pumped, not artificially, but it's being pumped on purpose, or the restraints are being taken off so the price will go up so that hypothetically the US government could revalue the gold that it hypothetically has in Fort Knox or the reserves, and that they could use that to then back our debt and get us out of this mess that we're in. I mean, Taylor, actually, let me ask Taylor first. What are your thoughts on that?
I think that would be. The problem is, I don't think our government really has that much gold. I think it claims to have a lot of gold, but it doesn't really have it.
Okay.
And then that we would have, if you actually audited it or did anything, that you'd find out that, we really, and I really don't think our government really cares right now, in the sense of they're kind of in a position of not, like, no one's really at the helm running the ship. They're just kind of going, well, everything is just going to continue like it is. And we can just keep taking out more and more debt, because look what Japan did. And we're kind of like following the example of Japan, that we can do the same thing and just keep devaluing our currency over the next couple of decades. And I think really what the hope is robotics. I think that's what pretty much everybody in the industry is. If we solve the problem of needing humans to actually produce things and go out and get supplies and everything, you're going to increase productivity so much that the GDP will shoot through the roof, and we don't have to worry about this. So it's like, can we keep this system going long enough to get robotics in play to actually move the economy at levels that we've never seen before? And really, that's all of our, in all honesty, that's really our hope. Like, if we're going to get out of this, it's going to be because of robotics, not because of anything else. And a lot of things that I don't think people really understand. Really, I don't know if gold is the best investment you should be looking at. It's silver that you should be looking at.
That's what I've been stacking the most is silver, because
Be,
silver hasn't moved in forever. I mean, I've been stacking silver for over 40 years, and
well,
uh,
the industrial need for silver right now
it's
is
off the charts.
it's off the charts. And if robotics do take off, all those robots need a ton of silver to function. And so, really, that's the investment, because the usefulness of silver is far more than gold.
Well,
Uh,
and I think it's agreed upon that silver's been artificially, depressed for quite some time for that reason, because any electronics, solar panels, any of that stuff, medical, there's so many uses for silver that if it went through the roof, that the cost of those things would be, it would price most people out. So, I mean, I know for years, I mean, during COVID, silver dipped down to $12 an ounce, and I loaded up because it had been around $25 to $30 an ounce for quite some time. And it basically lingered there until recently, to where it pumped up into the 40s and now 50s. So, yeah, I mean, silver is definitely where my focus is, while all the attention's on gold and Bitcoin. Um,
unless
I'm
they find
definitely.
something that has the similar ability that silver does in electronics and different things, its price is just going to keep going up because the industries buying it have to just continue to buy. Now, there's a lot more silver that's out there that can be mined and achieved, but most of silver is just a byproduct of like mining gold and different and other things that they find silver and they take it and they use it. But that being said, silver right now I think they said like 25% of the drive of it is industrial need.
Yeah, it's used in all kinds of stuff. I mean, there
Yeah,
is gold used industrially, but it's not nearly as much as silver.
yeah,
Well,
no,
and it's because of the price. It's cheaper to use silver than it is to use gold.
that plus the fact I think silver is a better.
So, want to just to answer your question on the gold thing, right? So, I don't put any stock into that particular concept for this reason. The worldwide market today is a roughly 30 trillion. Every single from the ring on my finger or whatever to the worldwide market for gold is valued at about $30 trillion. Right? Our debt's over 30, just our debt. So the United States would literally to truly back gold dollar for dollar, you'd have to have every single marketable. You'd have to corner the gold market 100%, which obviously is not going to happen. Right? That's not possible. Right? So we'd have to literally buy all the world's gold. And right now, our reserves, we do have the largest reserves in the world that are right now worth approximately $1 trillion. So we have according to my research, we have 8,133.46 metric tons of gold.
Yeah, which is also weird because like if the U.S. government was going to come up with a plan, it would be buy Bitcoin, do it with Bitcoin.
Mm-hmm.
You
Right.
could do it so much easier. You could drive up the price, start buying it like crazy. You could get Bitcoin easily to 10 million a coin, and then start backing it that way. And so if that was the goal of the government, that's how you would do it.
And they probably would they would open if I was going to do it, which is totally shady. I'm just kidding, NSA. But like, what I would think they would do is they'd open up hundreds and hundreds of shell companies via CIA and other organizations, and would fund it with black market. So they buy it on the sly,
Dude,
Yeah.
there's a
and then
theory.
they'd announce the strategic reserve and get this massive pump.
Well, there's a conspiracy theory that Bitcoin and Satoshi Nakamoto is actually the Central Intelligence Agency, the CIA,
Right.
Yeah.
and there's actually some pretty solid documentation
Compelling.
supporting it.
Yeah.
as far as patents and papers that were submitted back in the 80s and things like that, basically talking about cryptography and using it in the way that Bitcoin is being used.
I
So
mean, it's. I need to go back. I think I'm going to go. I'm going to get bored, and I'm going to go back and look and see, like over the next, ever since we went off the gold standard for sure. I mean, we kind of did it in several different places, but we finally went off completely in 71 or 72.
yeah.
I'm curious to have from like low to high, what was the total surge in gold before it had another plateau for a while?
Mhm.
Because on the one hand, it is up 60 something percent this year. So you kind of feel like, well, am I trying to buy after, kind of, what is it, closing the barn door after the horse is gone? But then again, this might just be the start. Maybe we're in inning 3 or inning 4 of a secular move, and there's a lot left to run. But I still think, to you guys' point, at the end of the day, it is simply an asset you hold. It does. There is no DeFi. There's no
Mhm.
utility beyond just owning it. And at some point in time, I mean, my understanding is that many of the newer cryptocurrencies that have come up, especially for special use cases, but that Bitcoin isn't very efficient as far as gas fees and everything else, as far as using it for actual commerce, right?
Oh yeah, yeah,
Relative to other cryptos.
yes,
You know what? Bitcoin's a hell of a lot more efficient than going down and smelting off some gold to go buy some boots.
exactly. And
So
and and, I,
you're going to
and
have
I'm
to
glad
trade
you
it
bring
for
that up.
dollars eventually,
Yeah.
right? So
Well, and that's why it's so important, to understand, the different utility. Gold, again, great hedge against inflation. Bitcoin, a lot better as far as earning potential. Bitcoin, a lot more liquid. A lot more, ways that you can earn, using it, and ways that you can leverage it to, lever up and, earn more. Gold, for the most part, for me, gold is like everything goes to shit, or I'm old and I have an emergency, a bill or something like that. I have gold or silver on hand that I can take care of that. That's what I see gold and silver for. Or if things get so bad that we're in Mad Max and I'm having to shave off a little bit of gold or silver to buy something. But for today's modern age, I see Bitcoin as being the better investment all around. And one thing I do want to point out real quick is, let's see, where is it at here? Where did it go? Ah, here it is. So I want to bring up this point because we're about to run out of time. But the U.S. government's official book valuation of its gold reserves is $42.22 per troy ounce. Basically, a fixed price since 1973 under the Gold Reserve Act. This accounting value applies to the approximately 261.5 million troy ounces supposedly held by the U.S. Treasury, resulting in a total book value of around 11 billion. So basically, the valuation of what supposedly the U.S. government holds in gold is valued at the $42.22 mark. If you
right,
look at
it's a statutory law. They actually haven't updated it, but it's not the market value. It's just what they say it's worth on their books.
exactly, so
Well,
my
I
point
said
is,
what it was worth if you sold it today. Yeah.
yeah. So basically my point is, and I'm asking you both of you, is if they adjusted that to today's price, would that be could that be a lever that could be pulled? Because a lot of people are using this or chirping about this. you know is that a lever they could pull to potentially get us out of this debt hole we're in, and mix that with the Bitcoin that they have seized, that they're holding in a Bitcoin reserve.
So I just saw a note. So the Federal Reserve recently, I guess this is something that's been gone around a lot. So the Federal Reserve released a note that said if we revalue to market prices, right? It would be if we revalue to market price. As a matter of fact, I'm just read the total quote. Hold on a second.
Okay, go ahead.
Let me see if I can find it. Um, damn it, it went away. But if we can revalue to market prices, it would only be worth 3% of our economy, right? So
Okay.
that's why it doesn't really matter, right? I mean, it matters. It absolutely matters if we have gold. But as far as what you're talking about, it's not.
Hmm.
It's not like all of a sudden we can go in and go, oh my gosh, we've been keeping this on the books at the wrong number. It's like it's not the same as you thought you inherited a share of Berkshire Hathaway from your grandfather, and you find out no, you inherited 1 million shares. Like it's not making that big of a difference, right?
Got
So, um, but I'm still glad we have $1 trillion worth of it, and I guess if it keeps on going, we'll be happy about it. But I don't know. It's an interesting time for sure.
Well, Taylor, closing thoughts.
Well, if you're looking for a business idea right now, you can go around to landfills and get all their old electronics and take out the precious metal out of them and melt it down. Because if it continues at this rate, basically, if you could run that business, you should be able to basically return. It costs you probably $25,000 to $75,000 to get all the equipment and do everything, but ultimately, in the end, you could return that whole investment within a year easily and be pure profit after that.
Granted, you're crawling through a landfill to do it.
Well, not really. If you think about it, how many people just throw away that crap and just don't even think about it? You could literally get so much of it. You get a lot of it just going through pawn shops.
You probably could.
You just find out. I think it's old photographic film has high content of silver in it and different things, but it's an easy business idea that not very many people are doing. And right now, with the price of gold and silver, it's a good return on investment.
Oh, run into thrift shops and and stuff like that, or raid your grandparents' sterling silver sets.
Yeah, yeah. You go to estate sales. Estate sales, they just give away that crap.
Yeah.
It's a whole opportunity out there.
Yeah, I mean, if you look at the bottom of a lot of things, or like it will actually be stamped in it. There's stamps that show that things are sterling silver and things like that. So, yeah, if you know what you're looking for, there's money to be made.
Exactly.
Well, let's. My closing thoughts on this is diversify. I mean, there's a place for everything in your portfolio, as far as gold, silver, for long-term investing, depending on your risk tolerance and your age, things like that. That's going to dictate, how much, that you put in those vehicles. There is a place, for Bitcoin. If you're looking to, aggressively grow your portfolio, it's one thing that you can, use. And then, of course, there's my favorite, lead. I've been buying, and stacking ammunition for quite some time, and since I started doing that, it's gone up substantially in value. I think when I started buying, I had 223 round was about 5 to 10 cents, per round. It's up to about 50 cents a round now, for the cheap stuff. So, there's investments all over the place, and I know out where I'm at, amongst gun people, you can trade ammunition, for goods and services. If you need something from somebody, you can trade ammunition for it, because you can protect yourself with it. You can feed your family with it. There's a lot of things you can do with it. There's a lot of utility. So,
just a disclaimer: trade ammunition doesn't mean he's a hitman.
All right. Well, I appreciate you gentlemen taking the time. I was missing having these shows. I really enjoy the the topics that we talk about. Just the kind of diversity of the topics and things like that. So, thank you, gentlemen.
Hey, one last thing, one last little bit. I looked up something for Taylor. I think he's absolutely wrong on how little it would cost to actually do his idea. But in his defense, So I found out phones have about 0.03 grams of gold, which is like $2 to $4 each. Laptops and desktops have 0.2 to 0.5 grams per unit. Servers and network gear can have multiple grams due to heavier connections. Why recyclers care? This blew me away. Gold concentration per ton of scrap electronics can actually be higher than mined ore. Typical
Yeah.
mined ore is 1 to 5 grams per ton,
Mm-hmm.
whereas e-waste circuit boards are 200 to 300 grams per ton.
Yep.
That's why specialized e-waste recyclers chemically recover gold and also silver, palladium, copper, etc. in its modern urban mining. So first of all, can you imagine back in the day in the gold rush, you got a shovel and you're shoveling a ton of rock to find 1 to 5 grams of gold?
Mm-hmm.
Holy crap. But anyway, I thought that was interesting. So if you can become a chemical recoverer of gold, then yes, apparently it's a really good idea.
It's basically an acid bath. They put the circuit boards in acid. It eats it off, and it's suspended in the acid. They put electrodes in it, run a current through it, and the gold collects on the electrodes.
Of course you would know that.
So,
Thanks, gentlemen.
well,
It was fun.
it was fun. Take care. Until next time, Veteran Crypto out.
See you guys.